and collapse is happening. Raamdeo Agrawal now joins us. Let's understand from his experience how should one cope up with this kind of a sell-off. Mr. Agrawal, good morning. Thank you for joining us. What does one do? Is it time to take a realistic look and say, look, this is a crisis, and in a crisis, strange things could happen. In 2008, when crisis had happened, markets had collapsed more than 50%. Right now, we are down another 30. So if right now we are dealing with a man-made crisis, which is health, and which is oil, and a medical crisis, which is the virus, things could go even worse than 2008.
Good morning, Nikunj, and viewers. See, one of the problem is that this is not coronavirus problem. This is the problem of fear of coronavirus. So underlying coronavirus is there, of course, and the solution for coronavirus is shutdown of the economy, which has never happened, whether it is a SARS or whether it is a 9/11, whether it is a Y2K collapse, Harshad Mehta collapse. You never close down the economy. This for the first time it is happening, and I don't think there will be anybody on this earth who has seen this kind of situation when the global economy is literally coming to an halt. And how do you model it? And everybody knows it's for a month or two, and yet nobody knows how to model this kind of change in the marketing scenario. So ultimately the underlying values of the companies will prevail, and all the excesses which were there in the markets in terms of whether it is a growth company and excessive valuation was there, or a fraudulent company which was kind of running the show. I think all of those extra gas which was there in the market, I think it will definitely has evaporated and is evaporating. But these are completely uncharted and first time ever in the history, at least for me, it is first time in the history.
So what is right and what is wrong in this market? What is value and what is still expensive? How does one figure out that, look, this is the fundamental bottom for this market? Technical bottom, Mr. Agrawal, nobody knows. But what is the fundamental bottom given that economy will slow down, earnings will be contracting, and NPA cycle will rise again?
So, it all depends on your understanding of the company. The valuation check or value check remains still same, because post coronavirus we are not thinking that it's a different world, different theories will come, different way of understanding will come. Again, the present value of future cash flows is the foundation of value. So that doesn't change. And I also don't think that fundamentally economics or the company's long-term future is impacted. Probably even 2022 onwards, EPS is also not impacted. And hence I think whatever was the assessed value, say a month back and today, would not be significantly different from most of the companies. Some companies which are weak and somehow they are not able to sustain this particular avalanche or this particular stress, of course they will go under or their valuation will change. But broadly, all the blue chips, all the strong companies, their earnings power is not going to change, and hence I don't think the underlying value changes. What is changing is the price, and right now the crisis is that of not a value change. It is a crisis of price change, and in the short term, these price changes can be quite crazy. These markets are all wired up, and world over prices are collapsing. You look at the Dow future and decide what should be the level of the markets here. So it's a very different world and very different way of looking at value or price in the short term. I don't think values have changed so much, and it is going to change so much in the months to come.
Now, Mr. Agrawal, before the crisis happened, we were staring at a very polarized market. 15-20 stocks were going higher, rest of the market was not going anywhere. The valuation difference between a Bajaj Finance and a Edelweiss had become extremely high. And that's largely because of growth and liquidity. So what happens now? do you think some of these polarized stocks which were going up because of global flows and local flows now will start coming down, and that's where the crushing fall will be even more?
See, right now, this is, I think, 18th day, foreigners have been selling almost $500 million every day. So that pressure is continuously there. And I mean, all the foreigners, all the institutions they own, all the bluest of blue chips, all the growth companies are owned by them. And hence, selling is going to come in the growth companies only. And growth companies, see, as you said in your beginning, when the selling comes and there is not enough buyer, the floor falls through. I mean, there is no buyer at 3,000 rupees, there is no buyer at 2,500 rupees. So what do? How do you create a buyer? So the biggest challenge is it is not allowed, it is scaring away the buyers. I mean, it's not that there is no purchasing power in the system. There is a purchasing power in the system. But today the fear of moving out or coming out and buying is becoming very difficult, because anybody who did bottom fishing at 9,000 Nifty, they are kind of they are scared at 8,500, and now index is even lower. So so the fear is becoming total, and hence anybody wants to sell. And another problem globally is the ETF. Now in ETF, global ETFs, or whether it is emerging market or MSCI index, when the buyer wants to sell say $10 billion or $20 billion, there is no option of anybody but to press the button. And we have seen our in our dealing rooms that the sellers have orders to finish off somehow or other during the day, irrespective of the price. So they are not looking at the price at which they are selling. They also bought without looking at the price. The world has changed in a way. In America, incremental, all the subscriptions are to the passive. And now I think all the sales must also be coming from passive. Now when the passive sells, when the passive buys, they don't look at the price. When the passive sells, they don't look at the price. Hence, if you see the chart formation, I mean, all the technical guys, they say they have never seen a drop without correction, because my sense is the ETF guys are selling without looking at the price. And so, I mean, it is uncharted, and we have to face it. We have to take all the knock on yourself. And my sense is, if you press the spring so much, I think it will also come back at double the speed. But when that comeback will happen, nobody knows.
Okay. Mr. Agrawal, there are some sectors where there is going to be a very strong disruption, like oil, OMCs, hospitality, aviation, where because of virus, it's going to, businesses will shut down, businesses will have to rethink their agility, businesses will have to rework their basic maths. So what happens to some of these sectors now? And what will happen because of these sectors to the banks which have given exposure to them? Do you think that is the bigger concern now?
Yeah, see, this disruption of 3-4 months, I think authorities have to come forward and say, I mean, whatever, see, because this is first time in the history. So how do you run the economy, and how do you run the companies, or how do you run the banks? So they have to come out with they have to listen to the problems, and say somebody is not able to, say somebody is working in shopping mall, and shopping mall itself is shut, and his salary or his income is impacted, the small shop owner or an employee, and his EMI or her EMI is impacted. So I think there has to be some kind of relief for 2-3 months by the authorities for these guys, and I'm quite sure it is coming. I mean, I think authorities must be listening to all of that. They are not able to announce till they get on top of the problem, but I'm quite sure the government authorities, I mean, world over, I think France, they have suspended a lot of tax payments, utility payments, and all of that. That exactly, those kind of reliefs, depending on what exactly is our problem, has to come. Authorities must come and talk to the markets and talk to you, and assure that the way they have stood by in the Yes Bank crisis, same way they should stand by everything is a crisis, in the sense that if EMI not coming or shops getting closed for 2-3 months, I think it is only the government only can bear this particular stress, because government has unlimited printing power, government has liquidity of the last resort, I mean ultimate liquidity of last resort. Even I hear that IMF is thinking of releasing $1 trillion stimulus to all the needy countries, and also I think a lot of these things are going to happen. But right now, if nothing has been announced, you cannot build onto any of these, and out of fear, people who cannot take the stress of seeing the lower quoted prices. if my portfolio is worth 100 crores and today it is 70 and day after it is becoming 75, there is a limit at which everybody gives up, and that pressure is just too much.
Just a very personal observation and slightly out of box. Buffett is sitting on $100 billion of cash. Last comment from him is that I will watch the fall and have more coke. We've not heard anything from Berkshire Hathaway or him which could calm the market or where he feels there is value in the world. Imagine the biggest value investor in the world is sitting on $100 billion of cash and he's still not indicating to the world that look, he is buying, because if he speaks he's buying, that automatically will calm the markets.
Good thing is that he has got $130 billion of cash, and literally in the global markets today at zero interest, he can raise as much money he wants. But probably, two things which might be hurting that, since he's a world's biggest insurance underwriter, risk underwriter, which must be running into 10, 15 trillion dollars, I don't know what is the number, and what all risk he has underwritten, that he only would be knowing. So probably he is expecting unusual, kind of a combination of claims, and hence this $130 billion, he would not like to blow off in buying shares, and when the claim comes, he would like to be fully liquid. So I don't know what's going on in his mind, and or he's buying something which we are not aware. So anything to say about him is very tough. Only thing is that finally he has been proved right that he sat on $130 billion of liquid cash.
Well, the more I read about Mr. Buffett, the more I admire him, that how financial discipline is important. Hats off to him to maintain this kind of cash, and now he's got opportunity. Okay, Mr. Agrawal, since you are a practitioner of value investing, where is value in this market? And imagine if some client calls up and says, Mr. Agrawal, this is the moment I've been waiting for. I want to buy India. Here's your blank check. Please feel free to invest. How will you invest? Will you invest right now? Or will you invest at lower levels, or will you invest after 6 months?
So, Nikul, to be truthful, we have been saying that you should start investing 10-20% every day or every week as the market goes down, and so we call it short blast kind of SIP. If you think that this problem is going to go on for 3 to 4 months, that is a period in which you must complete your investing. The bottoms and tops are made for fools and liars, and don't try to time the market too much. If you are sitting on the sidelines, you have got it right. Completely at your price, your stocks are available. So if you want to build your own portfolio, obviously you must know the value. But if you are not competent to understand underlying value of the companies, I would say go and find 2-3 brilliant managers. There are lots of them in India, and start rolling out your 10-20% now, and don't buy it everything in one day. Spread it to whatever 2-3 months. You'll get average of the worst of the sell-off already we are in, and you'll get averages. And I think after 1 year, 1.5 years, you will have a fabulous return out of your courage to move out and face the market when the whole world is fearful. You have to be greedy.
Mr. Agrawal, you were there and I was there, and we both jointly have seen the 2008 fall. The fall happened in 2008, and it took almost 2.5 years for markets to recover, and that was because liquidity was injected. Right now, liquidity is already there in the system and markets are not reacting. So when do you think markets will react, and do you think we are in for a long winter, which is that for NAVs and for SIPs to turn positive, it could take at least a year and a half, or maybe 2.5 to at least year and a half to 2 years?
See, in any case, last 3 to 4 years of gains is all washed out. I think when this government was sworn in 2014, I think index was about 7600. Now index is about 8,000. So clearly, almost 5 years returns are gone. Now the values of the companies, companies are not same in last 5 years. Clearly, we will get some return. once this, I mean, you cannot do your return calculation at the bottom of the market. You have to allow the markets to normalize, and in 1 year's time, you'll find that you would have a little, and I don't know how fast it will recover. What my experience is, even if you remember 2008, it fell all the way, and then it came back 100% in next 12 months. So I would think that the fall has been sharper than 2008 at this point of time, and it should take a shorter period of time. I mean, don't brand me as a technical guy, but since it has fallen so fast, the moment you get the message the world is safe and it's a place to live in, I think it will come back within no time. So I would not time too much. Whenever it reverses, it will reverse vertically up.
Right. Okay. So let's understand what is coming next. For someone who has no cash and says, look, I know these are bad times, I'm a student of finance, my portfolio is bleeding right now, but I have a compulsion that I don't have cash, I'm fully invested. A lot of fund managers are fully invested. So what is out of jail card? How does one deal with this fall, which I'm sure in hindsight will turn out to be an opportunity, but the limitation is that you don't have gunpowder or you don't have anything left to invest now?
So you have to stick to your investment style, and our investment style was always to be fully invested, never to be in cash. What has happened in the past is that out of 10 years, roughly 8 years used to be positive years, and 2 years typically used to be negative. So mathematically, it doesn't make sense to keep waiting for 2 years and stay in cash. So obviously your cash will not perform in those 2 years. Cash will perform only in 2 years, and for 8 years you'll keep missing income on those that cash you are sitting on. So clearly, I was very clear. I don't want to waste my time in timing the market, and I don't have competence to do it. So I'll be fully invested. Now, what do we do? I mean, actually, we are frozen because when I look at the things unfolding, see, I cannot control the price. But when I look at the fundamental development, whether it is a credit crisis, whether it is the oil crisis, whatever is happening in the economy right now, multiple things are happening. I don't think my portfolio is suboptimal. I love my portfolio. We are doing too many con calls. We are going back to the companies, talking to them, trying to check whether our stock identification is right, our stock allocation is right. Can we switch 2% from here to 2% somewhere else? So those kind of discussions are all. But broadly, the impact is going to be very little, maybe 5% or 10% at max. We can switch from current portfolio to something else. But everything is falling right now. Whatever I was thinking is the best is falling the most. So what do you say? I mean, right now, because what is happening is, what is the most popular and ultimate growth stock, or it was expected to be growing, that has been lapped up by everybody all over the world, and they are selling now. And when that kind of sale is coming, there is nobody to buy, and hence the damage is maximum over there, and it is hurting us. So I think I would just pass this time. It is painful time, and painful more for the customers, that they are under pain. I have seen 3-4 of them in 92, 2000, 2007. I have seen 3 turmoils in the marketplace, but this one is very unusual, very intense, and very painful, and for light-hearted, it is very difficult to pass, particularly with the mobile phones, where you can see entire your portfolio, the market movement by the second. It just increases the pain a lot more. So the behavioral construct, how to pass this time, is very important. You have to just keep cool. Maybe you have to do yoga, you have to do vipassana, you have to entertain yourself, but stay away from doing anything. That's what I'm doing.
It's a great point. I mean, you're admitting that it's pain, but that's the nature of equity market. That's the nature which creates opportunity, and that's the time when greed also gets created. Really appreciate your time, Mr. Agrawal. But it's important for us, all of us, right now, to keep ourselves safe and maintain social distancing. So that's what we are doing, and that's what I believe your firm